Here's a secret most investors overlook. The stock market's next big move might be hiding in plain sight. But here's where it gets controversial. Should you really trust the latest recommendations from analysts, or is there more to the story? Let's dive into the key stocks and market dynamics shaping investor strategies for September 19th, 2025, and uncover what's driving the frenzy. The big picture. Why markets are rallying. The Nifty and Bank Nifty indices have defied skeptics, surging for 3 consecutive weeks. What's fueling this momentum? A combination of India-US trade optimism and the Federal Reserve's rate cut has ignited investor confidence. Imagine this. After months of stalled negotiations, officials from both nations described talks as constructive and forward-looking. Suddenly, the possibility of a breakthrough feels tangible. For investors, this isn't just political theater. It's a green light for economic growth and corporate profits. And this is the part most people miss. The Nifty's recent 12-week rally, 21744 to 25669, has only retraced 38.2%, signaling a resilient upward trend. Think of it like a bungee cord. Pull it back a little and it snaps back stronger. Technical signals. What the charts reveal. The Nifty's bullish crossover, where the 20-day EMA crosses above the 50-day EMA, acts like a traffic light turning green for trend followers. This shift suggests medium-term buyers are gaining control, but don't get too comfortable yet. The index's stochastic oscillator is in overbought territory, hinting at a potential consolidation phase between 25,550 and 25,100. However, this pause could be a springboard, propelling the index toward 25,900, a key Fibonacci target. The takeaway? Dip buyers in quality large and mid-cap stocks might find gold in the next few weeks. Chapter Bank, a tale of two trends. The Bank Nifty isn't faring much differently. A 2,000-point surge in 3 weeks has retraced 61.8% of its earlier decline. Another classic bullish pattern. The Fed's 0.25% rate cut, its first in 9 months, has investors betting on 2 more cuts this year. But here's the twist. While the index looks poised to hit 56,700, it's not without risks. A drop below 54,800 could test its resolve. As this level coincides with critical moving averages and a key support zone. Is this a buying opportunity or a warning sign? The answer might depend on how the Fed's next move unfolds. Stock recommendations. Bharat Electronics and RBL Bank. Bharat Electronics Bell. This defense giant is painting a textbook bullish picture. With prices above key EMAs and a breakout above a falling trend line, Bell is on track to hit 467 rupees within 6 months. The 138.2% Fibonacci extension level acts like a gravitational pull, and as long as the 21-week EMA holds, the trend is your friend. But here's where it gets spicy. Is Bell undervalued, or are we chasing a story that's already priced in? Share your thoughts below. RBL Bank. This mid-cap lender is forming a base at the 20-day EMA, a sign of strength. With a target of 296 in a month and a 10% return potential, it's tempting to jump in. The RSI's impending bullish crossover adds fuel to the fire. Yet skeptics might argue that RBL's gains are already baked in. What's your take? Is this a short-term pop or the start of a sustainable trend? Final thoughts and the bigger debate. The market's current euphoria is built on 2 pillars: geopolitical progress and monetary policy shifts. But what if the India-US trade deal hits snags, or the Fed's rate cuts backfire? These are the questions that keep seasoned investors up at night. The recommendations here are just one perspective. Yours might differ. So ask yourself, are you buying into the narrative, or are you ready to challenge it? Drop your views in the comments, and let's spark a conversation. After all, the best investments are born from informed debates, not blind faith. Disclaimer: the views and recommendations expressed here are for informational purposes only and do not constitute financial advice. Always conduct your own research or consult a certified advisor before making investment decisions.